Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, welcome back to the show.
Jim, it's a pleasure to be back on the show.
And happy Thanksgiving.
Yes, thank you, Jim.
Wolfton Resources published an update for its Picket Mountain project in Maine, after which the stock drifted to a 4-year low. In fact, it's down 70% from where you recommended it at the start of the year. Why has Wolfton turned out to be such a bad stock pick?
Well, a couple things went against Wolfton Resources this year. I recommended it at the beginning at sort of 24, 26 cents range, first as a bottom fish, and then when they published their resource estimate in the first week, I upgraded them to a fair spec value recommendation. And what they had accomplished was they had demonstrated that they had 4 million tons in the west and east lens on that Picket Mountain project, which has, zinc, lead, copper, gold, and silver in it, and the rock value at today's prices is about $500 per ton. And this is of course going to only be in underground mining because that's only what's allowed after the state of Maine reformed its mining law in 2017. In fact, Maine had been a no-go place for mining for decades until they finally decided I think we do want mining, and fixed their mining law or put in a new one which has all the protocols for how it's supposed to happen. And Wolfton grabbed this project, and with the backing of Auzzies, was able to acquire the property from a logging company, and has since gone to work updating the work that stopped way back in the 80s when this was first found by Chevron and Getty. And what they realized was that 4 million tons wasn't quite enough for a standalone operation, which meant that they could mine the ore and truck or rail it to either New Brunswick, where there's all the operating mills and facilities to deal with it, or to New York, where Titan has acquired a zinc mine, which it's trying to find more mill feed for. But the value that you're going to get for that scenario is not going to be as good as from a standalone mine. And so they set for themselves the goal: we need to find a third lens, another 2 million ton body of similar rock value, so that we can have a long enough lived mine life to justify building a mill and just simply shipping concentrates. And they had a hypothesis at the beginning of the year called the footwall zone, which they had intersected late last year, a high grade but narrow interval. And what they wanted to do was start tracing this and see if there's a parallel lens similar to the east or west lens, not too far to the north from the established lenses. And they put out a news release fairly early in the year, and they did small-scale wedge step-outs, 25 meters or so, but the thickness did not get better, and they had horrible problems with the drillers. They kept jamming the rods, and they would lose the holes, but they then went and reamed out older holes and used those to do downhole geophysical probes, and this helped them understand a number of things. One, the footwall zone didn't really have any potential in a northeast direction and closer to surface, but it did have to the west and at depth. But the problem there is you do not want to blow your brains out drilling deep holes. And what the downhole geophysics also established was that in the west lens there was potential to go west, but at a depth of 500 to 700 meters. And in the case of the east lens there is potential to go down plunge. However, their modeling of the footprint of this potential suggested only maybe an extra 1 million tons, and that wasn't going to be enough to clear their hurdle for having a standalone mining scenario. And plus the cost of drilling these holes hitting a vertical depth of 500 to 700 meters, that wasn't really going to happen. The other thing that they did this year was this was actually the last hole of the season, and they call it PIX1. and there was a gravity anomaly that had shown up to the north of the east-west lens, which is what they call the main horizon, and it's stratigraphy that's been folded on its side, and that sort of strikes northeast-east. Chevron had drilled a couple holes in the vicinity of this gravity anomaly, not quite into it, but had intersected, a short, high-grade interval of massive sulfides. But it wasn't enough for them to follow up on, because the east and west lens had plenty of good intersections. When they drilled this hole, they again did not get to the gravity target. Once again, the rod jammed and they lost the hole, but they pulled 207 meters of stringer mineralization that exhibited the zinc, lead, and copper sulfides. And while they didn't report any grades, because obviously this is too low grade to be of interest as underground mining, they started thinking, this looks very much like the footwall to the east and west lenses. And they've developed two hypotheses as to how the geometry of this area works. And the simpler one that I can compute is the idea that the area has been folded over. There's an anticline with sort of the hinge axis striking in that northeast-east direction. And the east and west lens sits on the southern limb of that anticline. And what they may have here to the north, they call it the north horizon, could be the northern limb of this fold. And the spine of this anticline has since been eroded away, so that there's not a continuity between within that folded stratigraphy. So now they are submitting all of the core for whole rock geochemistry to see how similar it is to the footwall mineralization of the massive sulfide east and west lens, and they hope to get that by Christmas. And if they do, that will support the idea that this northern limb could have either the continuation of the east and west lenses, or possibly additional volcanic centers. And the other hypothesis that they have is that the geology is a lot more complex with multiple different intrusive centers and faulting, and that would be the scenario we would prefer not to become reality. But one of the additional things that they did this year was they extended the soil sampling and geophysical grid along the strike of this horizon. And while the soil geochem values are lower in the northeast direction, that is possibly explainable by the fact that the soil gets thicker, the overburden gets thicker. But their geophysics revealed a number of conductors that had not been previously recognized. And in the continuation of the east-west lens horizon, they do have conductors, but there are old holes into this, shallow holes that show, well, it's not super great there. Maybe it gets better at depth, but again, they do not want to drill deeper holes. What is intriguing is that about 1 to 2 kilometers to the northeast of that PIX hole that they drilled at the end of this season, they have 2 conductor groups that they call B and C. And those line up with the so-called northern horizon. And these have never been drilled. So these represent potentially shallow targets for massive sulfide mineralization. But they first want to go back to the PIX area, and there's no obvious conductors there. But they do know there is massive sulfide present, and it's probably too deep to be seen from the surface geophysics. So they'll go back in there and they'll drill some more holes in there, especially if they get the green light from the geochemists that yes, we are dealing with footwall, and of course they're drilling to the north because the VMS pile will be on the northern side of it will be dipping towards the north. So that opens up the possibility for finding that third lens next year when they go back into this project. But they only have $1.5 million left, and that's a part of the reason the stock has sunk down to below a dime. Kinross Gold gave them $2.5 million earlier this year at 20 cents, and even though they're supposed to be gold producer. They had a very good experience with the Buckhorn mine in northeastern Washington, which turned out to be a high-grade underground mine. So they like the high rock value that they see here. And Bay Street shunned the company, didn't want to give them any money last year, so they ended up getting money from Kinross. But now at below a dime, to raise another couple $1 million, that's going to be very dilutionary. And because the world still thinks that we're heading into a recession, which will be bad for base metal demand, which is the reason why all the base metal prices have been flat or trending down, and the base metal companies not doing well. There has not been much interest in a polymetallic story that's basically dominated by the base metals, copper, zinc, and lead. But they did do a reappraisal of their timber on the property, and when they purchased the property, they bought everything. It's patented ground. They own the surface and the subsurface rights, and that also includes the trees. And the appraisal says they're probably worth at least $7 million US. So they're looking at possibly selling some of the cutting rights to another group to raise the money to be able to go back in there and find that third lens that they so badly need. But there is a bit of a hiccup with this, and that is that when Altius paid $6 million plus for the royalty to help fund the acquisition, they were worried that Maine was simply pretending to have reformed its mining law, that in fact it was just going to go through the motion and then soon enough find that everybody's there blocking any sort of mining exploration advancement activity. So they wanted a way to claw back some of the value of that royalty in the event that it would seem hopeless to ever build a mine in Maine. But so far, the Maine regulators have been sincere about their reform law, and the company, although it seems like it basically failed to accomplish much this year, did spend the time to prepare a filing for a rezoning application from unorganized territory, which just allows logging to industrial use. And they figured out a 100-acre footprint, which would cover the mine and any infrastructure that they would need. And they hope to submit this in January. And the key here is to have the authorities accept it as, yes, all the boxes are ticked, this is what we want to see, we'll open it up for public comment, but in accepting it, it means that you have complied with all our regulation. So this is an important milestone that we hope to clear in January. It is likely what Altius needs to give the nod to say, yes, go ahead, sell some of those timber rights. We're also, the biggest shareholder in the company, so we don't want to, have you dilute the company at this cheap price and bring somebody else on board. So company's got all that going forward, and but stock price is here below a dime. They still have $1.5 million. They'll maybe get a couple million more in the door in January. They'll go back in with a new model of where they think they'll find this third lens, and so we start the year again. 1 year later, the stock is cheaper. The story is better. It has been enhanced. And, I would just say, it was a bad pick last year. If I ignored it, I would be absolutely delighted to discover it today. But the thing is, I would not know about this deeper part of the story, because if you read the news release, all you would have read was that, it wasn't really there, and it's kind of disappointing, and blah, blah, blah. You had to actually talk to the CEO to get the, Ron Little, to get the flavor of what was accomplished behind the scenes that actually advanced this story and makes it a better bottom fish pick today than it was a year ago.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, ATAC Resources recently reported results for its RAW project. Did anything positive emerge from the 2019 exploration?
When we focused on the RAW project, it was because sampling in 2018, checking out a kill zone that had been observed years earlier, resulted in the discovery of a very high-grade copper float in the vicinity of this kill zone. And the kill zone is where there are hidden sulfides whose toxic secretions prevent plants from growing there. And it's kind of an exploration tool where you see an area of like missing vegetation. It's not like there's a dead vegetation there. It's just absent. And that means there's something underground there that is naturally toxic to plant growth, or perhaps only to a particular style of growth. So the company went in there this year and also developed the Katy target to the north. And the hope was that because of the Rakla Pluton that's sort of at the center of the RAW project, and that is the driving engine for this, carbon replacement style mineralization all over the place. It's carbonate stratigraphy that's been intruded by a Pluton, and it creates polymetallic skarn deposits, also gold deposits, and the analog that had everybody excited this year has been Sun Metals and its Stardust project in central British Columbia, where they pulled that 100-meter hole of $300 polymetallic rock, suggesting that we finally found something much better than we've seen in the past. It's the skarn type zone that's closer to the heat source, where you can get bigger buildup of mineralization. And they thought this was the case at the Bobcat, but drilling intersected only narrow vein mineralization that was high grade, and it explained the float, but it made them realize this particular area is still distal, peripheral to the sort of place where a big skarn deposit would develop. So the hopes for the Bobcat zone to deliver a skarn discovery at the RAW project, those did not pan out. And then, of course, we had the tragedy this summer when the exploration VP, who was running the whole program there, Julia Lane, died in a plane crash while returning from the project site. The plane apparently took a wrong turn because of low ceiling cloud cover, and it turned out to be one of these dead-end valleys, and that was the end of Julia Lane and the pilot. And that sort of sucked the momentum out of the story, too. People kind of said, okay, what now? But they did do some infill drilling on the Tiger deposit, for which they had done a PEA in 2016. Now, that PEA wasn't particularly exciting. It was done at $12.50 gold. We'd have now $14.50 gold. But what they did was they went and infill drilled in areas where there appeared to be sweet spots, and they now have a new PEA being done, which will incorporate an updated resource estimate to allow better ore scheduling. And ore scheduling is the planning of the mining strategy so that higher grade ore gets mined earlier in the life of the mine. And this would be an open pit mine. And so they hope to have this out ideally before PDAC in March of next year, and being able to have a higher gold price. We hope to see better numbers than what we saw in 2016. However, these guys are not miners, they are explorers, and that's why one of the other things they have continued to work on is that 65-kilometer tote road, which would extend the road all the way into that RAW project area. and this is key to getting anything built. They hope to have the draft application accepted in March of next year. This will be an important milestone because there are other groups that are interested in developing, small to medium-sized mines with whom they might be able to do a deal and monetize the Tiger deposit and have that group develop it. But nobody's going to do this until there is a possibility for the road to bring equipment and that in on, cost effectively. So we have to sit back and see they have $9.5 million left, so that puts them in far better shape than almost all these other little juniors out there. And as far as the Orion, Osiris, Carlin-style segment, eastern two-thirds of that 185-kilometer land package that they own, obviously not much was done on that this year. They realized that we need to find another major after Barrick backed out last year to come in there and take on the big exploration that this type of story needs to deliver a sizable deposit. What they have so far, 1.7 million ounces at 3 to 4 grams, open pit and underground, and refractory. That's just not good enough, especially for a remote region like that, which has to be helicopter supported and everything brought in by airplane. So they hope to attract somebody else. It's obviously not going to be Barrick, but if they do, they can get that story going again. And so at the end of the year, the stock's cheaper than it was at the beginning, but the company's still alive. It will have some tax loss selling pressure as other groups who didn't sell last year say, okay, they're going to be focusing on the raw story, and that's kind of like lots of showings and places where they can begin, but there isn't any obvious new target at the moment, such as Bobcat emerged last year, where we can pin hopes on a big discovery next year. That doesn't say they won't make one, but in the absence of a specific focus, one has to just look at this as a great bottom fish.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, this week Newmont sold the Red Lake mine to an Australian mid-tier producer called Evolution Mining. Does this have any implications for this region and juniors such as Great Bear Resources?
This announcement came on early in the evening here in North America because Evolution Mining is an Australian mid-tier gold producer, and they made the announcement on the Australian morning. So when it was Monday evening here, if you were still paying attention, you saw this. Now this deal is a shocker because Newmont, which acquired Goldcorp earlier this year, is selling this the entire Red Lake district that it owns for US $375 million plus a $10 million bonus for each additional million ounces that Evolution finds up to $100 million. So assuming that they can find an extra 5 million ounces on top of the 7 million that are still in the ground at an average resource grade of 11 grams per ton, this is an absolute bargain. And at first you kind of say, wow, you look at Great Bear Resources, it has the Dixie project, which has a resource on it that's not worth anything at current metal prices. They found that Dixie Limb Hinge Zone, which is similar high-grade mineralization as the Red Lake District itself, but that no longer seems to be the focus because it's a small tonnage implication, and whatever is bigger is going to be considerably deeper. And they also have this 23-kilometer LP fault story that emerged in sort of August, September. And this is an idea that, overlooked by all the past explorers, is that there is a deep crustal break similar to the Destor Porcupine, which has similar, Abitibi greenstone belt style mineralization of shears and veins related to the splays coming off of this fault structure. And so they've been drilling and intersecting stuff, and the market has gotten excited that, wow, they have a substantial piece of land covering this structure that has not been properly explored in the past. And the stock got as high as $9.50 in September, got to $9.50, during which McEwen Mining blew out its entire position to help it meet its payroll. But now at around $6, it's $250,000 Canadian value. And what Evolution is paying for the entire Red Lake camp is about 500 million Canadian. So the question is Great Bear vastly overpriced, or did Newmont sell the Red Lake project way too cheaply? And I would argue that Newmont sold this at a bargain to Evolution. Evolution's biggest project is the flagship project is the Cowal Gold Mine in New South Wales, and that's an open pit mine. They hope to expand into an underground mine. It's got about 7 million ounces resource. They have 5 other smaller mines with maybe 4 or 5 million ounces, but they have literally added 7 million ounces plus a lot of exploration potential for what amounts to about $600 million Australian. And they have about 1.7 billion shares out and trading around $4. So they have nearly a $7 billion Australian market cap. And I think they did an enormous coup in getting this deal from Newmont, who incidentally virtually gave away the Dixie Lake project to Great Bear several years ago. And clearly Newmont is snubbing its nose at least this part of Canada, and reinforcing the perception that, Western Ontario, there's still ounces there, but it's basically a dying district. There's never going to be much significant more found. And yet when you look at the presentation that Evolution Mining published as part of its news release, they have this slide in there where they show these concentric rings radiating out from Red Lake District 150 kilometers away, as far away as the True North Mine in Manitoba. And they're saying this is prime underexplored region. So they've come in here and taken the prize, the Red Lake District, which itself has expansion potential once you put your mind to it again, but also the entire surrounding area is now got fresh eyes from Australia, which is not clouded by any negative experiences of the past few years. And while this is not going to have any immediate impact on Great Bear, which already has a healthy treasury and an exploration story going, for some of the others, this will be a good thing. For example, Pure Gold Mining, they're busy building their own Matson mine. They did a big financing this year. They have a 2 million ounce resource, but the question has always been, what's the exit strategy? So you put this into production, and you have a small tier single mine producer. Who's going to acquire them? Well, obviously now Evolution Mining could acquire them. They're not going to do this, right away. They want to see Pure Gold work through all the commissioning and everything needed to get the mine up and running, and then do so later. But they are now the aggregator and the potential farm-in partner for anything that's going on in Western Ontario. So I think this is a great development for Canada. It's very different, much smaller value than, say, Kirkland Lake, whose flagship asset is in Australia, absorbing Detour Gold and taking a 20% haircut in the market as a consequence. That consolidates a standalone mine that has had its problems with on dissident shareholders and troubles with First Nations. It puts it into a bigger company, makes it less of a single easy target for those who want to cause trouble for it. But it doesn't have as broad implications for Canadian exploration as Evolution Mining moving into Western Ontario, taking on the Red Lake camp, breathing new life into that mine itself, and possibly consolidating the other operations that are nearby, and then supporting, or at least serving as a support for new risk capital coming in to bankroll juniors who are taking a fresh look at an area that may have had a lot of its potential in the past overlooked.
John, thanks a lot for the update.
You're welcome, Jim.
And again, a happy Thanksgiving to all of our American listeners. If you have any questions for John, try checking out his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.